Hi, everybody. Welcome to our latest edition of Highlights, our key trading and active investing strategies. So, when it comes as a trader, when it comes to trading itself, you got to understand yourself a little bit better with respect to how aggressive you are, how conservative you are as a trader, understanding at all times your risk rewards that are facing you. You've got to understand your emotions fairly well, understand what your thresholds are in terms of what really triggers real negative emotions versus euphoric emotions as well. And the bottom line at the end of the day is it's great to make money, but you still have to preserve it. So you have to understand your risk, you have to understand your reward, you have to understand where your thresholds are, how much are you willing to lose, and you still have to, still have to preserve that money to be able to play the game, and be able to live to trade again another day. You look at a chart like this, and you're looking at the pattern, and there's resistance clearly across the top. There's this area of resistance across here. You've got a shooting star that occurred on the far left over here, another one here, bearish engulfing here, a dark cloud cover just below here as well. Then of course you tagged it here as well, and then once again here. But the overall pattern sort of gives you the inclination because of kind of a cup-like formation, and of course the trend being up this way, that this looks pretty bullish, and you might want to consider very strongly a push to the upside, another long position on a break to the upside on momentum. Certainly, you could look at that scenario, but also know what would be the downside, know where your risk is, where you're willing to get out, where you should be getting out on a close at a certain point. So understand that you calculate all these things based on the pattern that you see going forward. And the good news about a trade that's something like this is essentially you don't have to worry about getting into the trade really until you get, as a breakout above in this area here. So you don't have to do anything until you get into that area, and then realize what your risk would be that trend line I drew across there horizontally, or slightly below it. And if you're really looking on to put a lot more risk, then of course you'd be looking for something way down here maybe. But ideally, you'd be looking on the breakout on a momentum trade to the upside. If it for some reason it fails and never gets to that point, it starts to fail going to the downside, then you could always consider a secondary plan of a break below this area here and looking for a target down in this area as well. So there's always a secondary plan, but your initial plan based on the overall pattern is going long, going bullish, and looking for a momentum trade to the upside. And there's always a secondary plan in the event that that one fails and you feel that there's a breakdown in the trend, a breakdown in the overall pattern, and you might have an opportunity to trade it to the downside on momentum on the downside as well. So let's take a look. Let's advance this a little bit here. Take a look at what happened so you can see a little better. And I'll blow this up a little bit better for you as well. So you got essentially a breakout that occurred right across here. There was a momentum break for sure that occurred. It stymied a little bit, came back and retested that breakout area. In fact, you can kind of go as low as maybe in here even, and you can see it was kind of like a range of a breakout, or at least a resistance area, which now became support. It's kind of like something like that. It was kind of a range like that. And you can see what happened on several occasions. There was the initial breakout that occurred, in here, right there, and then came all the way back down to test there, broke out again, came back and retested again here, and eventually broke out higher again. So once it broke certain levels in here and then eventually here again, it became even stronger at that point. So it certainly flopped around some. There was certainly some breakouts, but once again, you've got your risk reward set up, you've got your stops set up along the way as well. Now note as this starts to get stronger, as all that testing occurred and the breakouts occurred after again and again, that support definitely held, which was a change of polarity. What was resistance now became support. It was tested multiple times, eventually securing the trade, securing the profit, or at least the price action to go higher, and it went out fairly aggressively, as you can see, to the upside. Then you take something similar in a sense on the flip side with a downtrend, and you can see fairly clearly there's a trend coming down this way. You can see there's a trend this way, but ultimately you're looking at kind of like that, and eventually something that kind of parallels that way. And so you see the series of highs where the trend and the channel is still to the downside. Now, the decent news is at some point here across, even here, there seems to be, doji, spinning tops, bullish piercing. There seems to be a level of support across that price right there. Eventually, a small failure, which then now becomes a little bit of a resistance area to some degree at the same level, and continues to sort of just chop and fade very, very slowly to the downside. So you're looking for either a breakdown to the downside again, or maybe to the upside. And if it's to the upside, then where would be the ideal location or place to consider something to the upside? So one could certainly be looking to the downside, which it did, as I said, very briefly and very methodically, kind of down through that area. It broke that support, but not very aggressively. It didn't really sell off. So the bulls, the buyers were still kind of present. It was a matter of getting back over that blue line, over that area, and it would probably secure a little better. And as I mentioned, this area right here ultimately, because that was essentially a parallel. When you draw that exact parallel, you're going to see how that fits right with these series of lows right there. So there's a little bit of a channel that was coming down that way. So from there, you can see what happened. There was a breakout above that blue line, and then back into that right there, just kind of testing that trend line right there, and then eventually broke out. Now the other part is, of course, we got the trend lines diagonally, but you've also got across here, right? You've got this area right here where the shooting star was. So you've got one breakout, then ultimately the best place to really consider ultimately would be if it can clear the trend line, then it needs to clear the pivot area this high of the shooting star. Then it becomes a little bit more interesting of a trade. Now, of course, many of you are already pointing out and thinking, well, so you've got your lines, you're saying, wait a minute, there's this here, and ultimately you've got, of course, the window across here as well, right? Let's not forget there's a window right here. Of course, we know that's going to be a target. That's going to be a likely potential resistance area. But where is the real resistance? Where is the main? It's this one up here. This is the one that you really need to focus on ultimately as well. So as that stock does in fact break out of this trend right here, after a little bit of a stumble, you know the target becomes that horizontal pivot area, the high of the shooting star, and then you're looking for a move into the window. Now that window, it could be a target, but you don't have to exit there unless you've got some serious or strong candles that are negative and bearish. So what happens? You have essentially a huge breakout that ultimately hits the target you're looking for, which is all the way at the top of the window area, and that ends up being a very aggressive, very strong breakout area. So an aggressive trader most likely would have entered probably on the breakout here, and then the less aggressive, the maybe a little more conservative, would have been looking for an entry in here. Anyway, the way you look at it, your stops would have been those exact change of polarity areas right there, 48 and about 51.50 on the upside, with the target being, as I said, that window above. So from here, you see a little bit of a stumble, upper shadow. So you're definitely taking profits here. Then you got to move into maybe $60 with a dark cloud cover and the shooting star is above. That could be another potential breakout area again. So you got this area all the way across. That could be another potential. So even though you've lightened up your load, if it goes through that area, you could carry that and just trail it, or always consider adding on depending on how comfortable you are with the current patterns and the design. So it holds, it pushes through, it hits that target, tries to push through, see that large upper shadow again, and eventually starts to show a little bit of signs of difficulty and failure. It's got an interesting pattern for sure in terms of what it did from that bottom going to the top, definitely hitting the target with your stops in place and trailing stops in place after hitting multiple targets and taking profits off the table. You would have done just fine. Well, I hope you found this informative and look forward to working with you as we continue down our path to education. And as Steve always says, may the Nissan candlestick continue to enlighten your path to greater prosperity.